Hey everyone, welcome back to Corporate Decoder, the place where we read the documents so you don't have to. Today we're diving into Meridian Corporation's latest quarterly report. Get ready for some number crunching because this report has a few surprises, maybe not the kind you'd want at a birthday party. Before we jump in, if you're into getting clear insights from these kinds of corporate documents, hit subscribe. We've also got a Discord community linked in the description below where you can chat with other folks interested in finance. So Meridian Corporation, a Pennsylvania-based bank, just released their Form 10Q, which is basically a quarterly checkup for investors. Let's get a quick snapshot. As of May 5, there were over 11 million shares of their common stock floating around. Now let's get into the juicy financial bits. First up, the balance sheet. It's like a financial photo of what the company owns and owes. They had about $17 million in cash and due from banks at the end of March, way up from only $5.6 million at the end of the previous year. So they have more liquid cash on hand. They have over $2 billion in loans, but they expect that some people won't pay it back. So they've set aside about $20 million for those losses. That's called the allowance for credit losses. Deposits are up, with non-interest bearing accounts jumping to $23 million from $240 million. This is great as the bank doesn't pay interest for this money. This probably means that more customers trust them as a safe place to keep their cash. Stockholders' equity is about $173 million, a bit higher than last quarter, so the overall financial picture looks reasonably healthy. Now let's flip over to the income statement, which tells us about profits and losses. Interest income from loans was up a bit, about $36.5 million compared to $35.3 million the same time last year, a relatively small increase. Interest expense on their own borrowing also went down. This means they are paying less interest on loans, which is a good sign. However, they had to set aside $522 million for potential loan losses, much higher than last year's $2.8 million. This probably means that they feel some of the loans they have might not be paid back. This ate up a big chunk of their profit. Their earnings per share, which is what each share of stock earned, went down from $0.242 to $0.21. This means the company is earning less per share, but it is still making money overall. Non-interest income, which includes things like wealth management and mortgage fees, went down a little from about $8 million to $733 million. So overall, not a great picture for the company. They have spent a bit more money on employee salaries. Salaries went up from $10.5 million to $11.3 million. At the end, net income, the real profit they made, was only $223 million, a bit worse compared to last year's $226 million. A rough comparison for the bank when looking at profits overall. Other comprehensive income loss, which includes things like investment gains and losses that haven't been cashed out, was about $500,000 and pretty much the same as last year. Not a great number to consider. Looks like Meridian gave away stock to people that totaled around $400,000. Cash from operations, the actual money the company makes doing its thing, was up massively at $18.1 million compared to negative $1.7 million last year. So the company can generate cash but may have trouble being consistently profitable. They're also playing the investment game, selling and buying securities. Not going to go into the details here. Looks like they took in significantly more cash from financing activities this year, about $137 million compared to only $46 million last year, and that they paid back more of their debts. Overall, at the end of all of this, they had over $100 million increase in their cash and cash equivalents. That's where they increased so much from. The company does have some securities that are losing money right now. Most of the losses are on their holdings of government-related bonds. But their value is expected to recover. Basic earning per share dropped slightly, but the big number that you should take away is 0.21. They exclude a number of shares from their calculation of total earnings, but it isn't too material to the actual profits overall. Their securities are the best rated, so Meridian has bought safe investments and is likely able to sustain further hits in the future. Their portfolio mainly contains mortgage-related bonds that they purchased several years ago. This all sounds good, but what are the risks? The company says that lots of things are out of their control. Here's what they said. It's difficult to predict some of these things, especially factors regarding the economy or technology. My overall opinion on this company is that they've had a bit of a rough quarter, but are still kicking. They should focus on a little bit more on cost cutting And I'll be interested to see where their numbers are later in the year. Some potential for economic improvement. Alright, that's our breakdown of Meridian's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.